Hi, I'm Des Dowling. Welcome to Melbourne Property TV. Tonight, we're in one of my favourite suburbs, St Kilda, a fabulous cosmopolitan suburb that is never ever boring. We'll take a look at the real estate market here and also have a look at the fabulous community garden, Veg Out. Our panel will discuss do-it-yourself at home, what jobs you should try, what jobs you shouldn't. And we'll talk to people who are investing in the United States in the property market and the pros and cons of doing that.
While the US property market has dropped dramatically, some Australian investors are taking advantage of these bargain basement prices. But what are the risks?
Ben Kingsley from Empower Wealth is a property investment advisor. Now, Ben, what's your view of the great American dream for Australians?
Des, what's happening in America is certainly people are seeing an opportunity to try and get into that market in terms of investing in property. It's obviously, the market's in turmoil. We still haven't seen the bottom of the market. And with any type of investment, you've got to look at, the risk versus reward. So when I look at America, I look at the fundamentals. Now, when we look at that, we say demand and supply. In Australia, we're seeing, an undersupply of property, but reasonable demand at the moment. In America, we've got an extraordinary amount of oversupply of property. So when I look at the fundamentals, I probably say to myself, generally speaking, it's a difficult, decision to get into the American market.
Well, Cole Cameron did what a lot of people talk about, but very few people do. Cole, you've invested in American real estate at a time when it's, fingers crossed. Tell us about your experience doing it. What have you bought? What did you pay?
To be precise, I paid $167,800, so $167,800. So it was a property that was listed, I think, about $185.
And what do you get for that? What is the property? What is it?
You get what they call a single-family home in the States. So it's 3 bedrooms, 2 bathrooms, and a lanai, which is an outdoor kind of area, screened area. What
sort of return on investment do you get for that?
The return on that one is, before costs, is about 9%. So usually you drop 50%, so it's about 4.5%. Now, 4.5% sounds ridiculous, but that one is under a completely different strategy from a property that would make a great return. So that one is purely about capital growth. So I just went for what I thought was the ultimate buy, potentially, which would go up in price. So I bought a house that in 2007 was listed at about $600,000. And so, as I said, I bought it for $167,000.
Yeah, look, there's no doubt that certainly from a yield perspective, given the value drops in some areas of America, we're starting to see, double-digit yield returns. But it still comes back to the risk versus reward. Sure, you can get into that market, but it's not really investing, in a passive sense. You've got to make sure that you're going to get the returns over the longer term. Now, I call this more speculating. So if you're an experienced investor and you've got a portfolio of properties, then maybe looking at America mightn't be a bad thing. But for first-timers who are thinking get rich quick, it's certainly a marketplace that I would tread very carefully.
Because that is the thing, with all the news coming out of Europe and the fact that in America they're still having trouble with obviously servicing the national debt, which is astronomical. It's we still don't really know. It's a bit of shifting sand, isn't it?
Yeah, look, unemployment, double digits, prospects of wage growth, which really drives value over the longer term, questionable. So when I look at it, I just sit back and I say, fundamentally, the numbers just don't work for me.
Obviously, you've done a lot of due diligence. Is it some people shy away from this because they think it would be a nightmare of red tape? Yep. Is that right?
Not necessarily. It comes down to people. It comes down to contacts. You get to know people. The people in America are extraordinary. They will do anything for you. There's a level of service that I haven't seen, before. I mean, I'm Australian.
You went over there. You didn't just do it
from here. I went over there. I would recommend that anyone, if they're going to invest, go over there, for sure.
You're not tipping your super into the American housing market?
No, but I do know of some clients who are using their self-managed super fund to invest in properties in America. And again, I suppose, if you've got a $500,000 balance in your super fund, a $50,000 investment in that market, as long as your fund is capable of doing that, people are looking at that. But again, I suppose that's more of a speculative play rather than a sound investment.
Is it the old only invest what you can afford to lose?
Pretty much. I mean, again, it's a speculative opportunity. It's not, the foundations and the fundamentals still aren't quite right. We're seeing property management isn't well looked after over in America. There's really not even an industry. So when I did my investigations, if you have a tenant who's not paying and you don't have any property management support over there or a legislative regime, what's going to happen? I mean, who's going to chase the rent? Who's going to kick out that bad tenant? All of the things you need to understand. So you definitely need to do your research.